Okay, guys, we'll go ahead and get started. I think that most of the agents that are here are already here. There may be a few that straggle in. So please help me in welcoming. We have Scottie Wyatt with Carper Insurance with us today. And then Mark, it's Michie, last name Michie, and he's going to talk with us about health insurance as well. So we'll talk about all the different insurances, and we're very happy to have you. Thank you, and go ahead.
Thank you.
Yes.
I want to say thanks to you and Amy for inviting me here today. And first, I want to just do some introductions of who I am and Molly and Mark here. So I'll just start off here. So my name is Scottie Wyatt. I've got some business cards I think I passed around. I'm the owner and president of Carper Insurance here in Blacksburg. I live in Blacksburg here with my wife and kids. And a little bit of, my history is I graduated from Virginia Tech in 1998, actually in electrical engineering. I don't know how I wound up owning an insurance agency. It's not normally a direct path from engineering to insurance, but I'm here. Prior to owning Carper Insurance, I worked for a Fortune 100 company in sales and marketing, leading a sales team along the East Coast and their Canada area. So I got a lot of great experience from on how to run a business and also how to lead a group of employees. So I wanted to introduce Molly and Mark. Molly here first. She's part of my staff. Molly, I'll let you introduce yourself a little bit.
Hi, I'm Molly Rogers. I do apologize for my feet today. I threw a knee out Saturday, so y'all don't have to excuse my feet today. He's laughing at me. I didn't know I was coming around, but at least it's something to put on decent shoes. Nobody paid that. None.
That's right.
So I've lived in the Blacksburg. Yes, I lived in the Blacksburg area about 10 years with my husband. My husband actually runs a Hyatt place here in town, and sell all aspects of insurance. I sell personal lines for your home, your auto, umbrella, life, Medicare supplements. So we can give us a call or give you a quote.
And she has 5 kids. Can anybody beat that?
I have one grandchild. Yes, lots of hormones in my house. They range from the age of 22 to 26.
Wow. Superwoman here. All right, thank you. So
Great hair, Molly.
it's covered. So next is Mark Michie. Mark is he owns his own company, but I've got to know Mark over the last year or so, and I trust him a lot when it comes to health insurance. And so I send him a lot of my clients that ask us for health insurance because I don't deal with health. So Mark, I'll let you introduce yourself.
Thank you, Scottie. Yeah, you said it. I do health insurance. Mainly, I've done a lot of employee benefits. I've been around since 1996. My father actually started an agency back in '73. So I've kind of grown up, although I've done a lot of different things in the business, so to speak. But yeah, a lot of changes in healthcare, and it doesn't get any better. For some people, maybe it does. So, but you basically got 45 days for me, everybody that's enrolled in healthcare. They have a marketplace plan to make decisions, so that's why I'm here. If you have questions, give you some info.
Yeah, there's some important updates that were made in the law that Mark will inform you of that could really help you guys with your healthcare costs. So he'll talk about that after we cover the homeowners insurance. So the objectives today are twofold. One, talk about homeowners insurance. Hey, Amy. Hey. Oh, it's fine. And then the next is health insurance updates. So first, as a professional, all you guys here are professionals in your real estate field. I'm a professional in the insurance field, and what we always strive to do is create value for our clients, added value. You guys, your added value may be your responsiveness to your customers, your availability on weekends, or whatever your schedules are. You could have very specific knowledge about the market or about specific homes. So that's how you add value to your clients and stand out from other realtors. Another way is adding value is from knowledge about insurance, about mortgages, and all the other things that your buyers are going to go through as they buy a home. And you're kind of leading them and you're quarterbacking everything for them and making it easier. So what we're going to do today on insurance is my goal is not to make you an expert. The goal is to give you some very broad areas that can really impact your homeowners insurance premiums. And if there's things that are impacting the insurance premiums, there's a good chance that those same things will be impacting your owner's cost of ownership, meaning there could be more repairs that are down the road. And in some extreme cases, it could be, a potential for a higher risk of loss of life because of electrical problems and things like that. So we'll point out some of those things just to give you a good general knowledge of what we look for in the insurance world. So as you're out there with your clients, you'll be able to point out some of these things, or at least know that this could be a potential problem. So that's the goal today. And then of course, Mark will talk about health insurance after that. So I'll take about 20 minutes or so. Mark will take about 10, and then we can have just a Q&A session. Any questions that come up during or after, we can talk about those. So sound good? All right, excellent. So I do have a few other folks back at the office here as part of my staff as Carper Insurance. Dan, Molly, which is here, and Sheila Coble and Joyce McGuire. Just wanted to point those out. So if you ever call the office, these are the folks that you may be talking to on the phone. It's always nice to have a face with the name. So we talked about the goals a little bit. Of course, we get the free lunch today as well. So there's plenty of pizza, so please eat up. So some of the basic things here. What is homeowners insurance? Most of you, I'm sure all of you know what it is, but just from a very high level perspective, let me slide this over here so I can. So homeowners insurance is all about making an owner whole after a loss. And what I mean by making them whole, if their house burns down, then we're going to rebuild the house to the similar way it was before. If they had carpet throughout the house, we're not going to put in, brand new marble floors. It's going to be similar fit and finish as what it was before. I'm sorry? Right. Yeah. So, and it's interesting, sometimes, the whole insurance industry is about indemnification, which is being made whole after you have a loss. In the homeowner's world, you actually get an upgrade normally because your house is upgraded. You get new fixtures, you get new floors, you get new walls. So, but the main point is that you're not going to come away with a wad of cash in your pocket after a homeowner's insurance claim. It's more about making the house what it was before. So there's two main pieces of a homeowner's policy. There's the physical structure and there's the personal property. Physical structure is most commonly called a dwelling or a dwelling value. And the key point here, a lot of our customers get confused about what the dwelling value is versus the market value. You may have a property that's worth $150,000, just the land, and may have a very small home. And whenever we insure it for, say, $50,000, they're like, wait a second, it's worth $150,000. It's not about that. The dwelling value of the physical structure is about the cost to rebuild that home on that land. So a lot of clients get confused about market value versus dwelling value. The other thing that we point out to customers, personal property is anything in your home that if you imagine turning your home upside down, shaking it, anything that falls out, your clothes, appliances, furniture, that's personal property. And so what we advise customers to do, and actually we offer this as a free service, is to take pictures at a minimum of your home personal property. Because if there's ever a loss like we're seeing out in California, the chance that you're going to remember what all you had in that home is, very slim. So I say here, there's no blank checks provided. The insurance company is not going to give you a blank check and say, here's the $200,000 in personal property. You'll get whatever you write down in an inventory list. So, Molly, can I get some water? I'm already getting dry. The other big piece of homeowners, sorry.
That's why you did it, because it could go on camera,
Right. Thank you. The other piece is liability insurance. So what this does, it protects you. The most common thing is somebody falls in your property and they get hurt and have to have medical attention. This pays out if you are found to be negligent. And negligence means maybe the floor was wet, you didn't clean it or dry properly, somebody slipped. If you're not negligent, there's still a small piece of coverage in your homeowner's insurance called medical payments. That's normally a couple $1,000s that will be paid regardless of who's at fault, even if you're not at fault. But liability insurance protects, of course, for medical injury. It protects for legal expenses if you get sued. And it also covers pain and suffering, should there be pain and suffering involved with the person that fell or got hurt on your property. Any questions on that? Just a very basic overview. There's a lot of other pieces to homeowners, but these are the big items. you get what you pay for. Everybody hears about that, right? Not all policies in the insurance world are created equal. There's HO1 through I think there's 10 or 12. You just went through the class. It's not, so there's a lot. Most commonly what you see in residential real estate is HO3 and HO5. And I put here the difference between those two with the type of perils that are covered. With an HO3, open perils means that essentially the insurance company is responsible for proving or disproving that that they shouldn't cover it. Does that make sense? So, let's say that lightning comes and strikes your home, and lightning is a covered peril. And a peril is anything that happens to your home, like fire, hail, things like that. You don't have to prove it was lightning. The insurance company has to disprove that before they pay. Right, exactly. Yeah. So named perils, if it's up to the homeowner to prove that it was one of these perils that caused the damage. Open perils means it's going to be covered unless the insurance company can't prove it otherwise. So it comes in big time when you're filing a claim. So we always recommend an HO5. And in reality, a lot of times you see most people have an HO3s, but an HO5 does not cost you much more. And when you have a claim, it's so much easier. And actually, the insurance companies prefer HO5s because it's an easier way to handle claims. So next we're going to get into the big factors that will impact your insurance premiums. This is a personal level for a lot of you guys and also for your clients, of course. Here's several items that we're going to go through, and I've got slides on each of these, so I won't name them all right now. So first is the insurance score. Who loves credit scores, right? It's kind of factored into everything we do in life these days. Well, insurance score is derived heavily from your credit score plus previous insurance claims. It's just like a credit score where the lower it is, the higher your insurance premiums are going to be, the higher the insurance score is, the better your premiums will be. As a matter of fact, I had a client that we quoted back in like April timeframe. They wanted to switch, but then things got busy with travel in the summer. So we spoke again in September. Well, in between that time, the husband's rate went up because his insurance score went up. And it was all because he got a new credit card. So it was like $100 difference in his homeowner's premium because his insurance score was affected by that. It drives me nuts sometimes, but it's just the way every single insurance company out there rates their customers now. It's the insurance score. I'm sure most of you heard about an insurance score. Or is this new terminology for you? New? Yeah, you better explain it. I mean, I could go deep, but it's a long. I mean, there's like probably 30 or 40 different factors that go into what creates it, but the two dominant ones are the credit score and the previous insurance claims that the client has had. No, a clue report is specifically a report on your homeowner's losses. And we don't even see the insurance score when we do quotes unless we call in and talk to underwriting or the home office and ask, well, why is this person's premium so high compared to what they had or whatever. And then that's when we'll learn about the insurance score that they had. And there's an organization called LexisNexis that is the kind of like the, you have the credit bureau ratings, and LexisNexis is the king of that insurance score. So if there's a dispute or discrepancy, you have to go to them to get it resolved. And I'm not sure it's any better than the credit agencies. Mm-hmm. It's probably been impacted, but the credit score is one of the main factors on that, and second being your previous claims. And then can you tell them what the clue report is? Because we've got a lot of new agents who might not know what a clue report is. Yeah, so a clue report is essentially, that's a good question, because what a clue report is when we put in an address and the person that's going to be the insured on the policy, it pulls back any claim that they've made in the past. And typically it's back to 5 years is how far back they look. So if you've had a claim, it'll show up on your clue report. I don't know what clue stands for. Do you know, Molly?
I don't remember
claim, loss, something.
But another thing that it can also pull, not just your claims, but like for your customers, it could pull a risk claim for a property that they're getting ready to buy.
Right.
So if the property on 200 Prospect Street, had frozen pipes 2 years ago, and they had an insurance claim for $48,000, that will pull.
It'll pull, yeah.
It'll pull because it wants to make sure that the person they're trying to insure was not that same person at that property 2 years ago.
And it also ensures that it's been resolved or it's been fixed satisfactorily, that claim has been fixed.
That would not have any effect on the owner.
No.
Because that happens very often.
Right. Yeah, you will see that, but the agent should be able to negate that and, dispute that on the report, and it wouldn't impact the premium. Right.
I mean, who is the agent you're referring to? The insurance agent?
Yeah, this insurance agency, like in our office, we would do that, and I'm sure.
Okay, not us.
Right. Yeah, sorry, the insurance agent. Yeah, right. And if there's multiple claims on that house, then it may raise a red flag, like this home could be a high risk because the materials used or it's very old. And so that could, in fact, still impact the premium on that house if it's not just a one-off thing. Yeah.
Standard practice, full report when you're running the insurance on property, right? That doesn't have to be requested, does it?
No, it's standard. Whenever you get a quote, it'll pull it. It's considered a soft hit on the person's credit when they're doing a quote, so it doesn't impact the credit score negatively. But yeah, it's standard that they'll be able to see those any previous losses on that property. Yeah. Yeah. Next thing that impacts the premium is something called protection class. Protection class is basically a rating in the insurance world that will rate how close you are in proximity to a fire hydrant and a fire station. The closer you are, if you're really close, you're going to have a protection class of 1, which is the best rating. If you're really far away or no fire hydrant at all, and you're more than 6 to 8 miles away, you're going to be rated a protection class 10. So when you're out in the rural areas, you'll see insurance rates are higher for the same dwelling value versus something that's in town, because obviously the longer it takes a fire truck to get there, the more the house is going to burn and more damage sustained.
So how do you find out how far away the nearest fire hydrant is?
So we haven't found a great website. The websites I've found do a bird's eye view, basically, and it has to be road miles. So basically what we do is we go put the address in and the closest fire station and see what the road miles are. That's when we do it manually. That's how you could do it, but then.
Right, so for
Right.
a fire hydrant, basically, if you can't see it from your front yard,
Yeah, it's 1,000 feet is kind of.
1,000 feet is the category.
And each company,
Protection.
each insurance company they're a little different on their rules. What's a PC1 versus a PC10? So that's why I put, no more than 6 to 8 miles, because some companies are 6 miles, some are 7, some may be 8. So it's a little bit of a flexibility there with some companies. But did that answer your question? Amy?
Yeah, it's not easy.
Yeah, it's not easy. And our systems, when we put it in, most of them were automatically rated. They got their hands into GIS maps and everything, or some system that they know where the fire hydrants are, and that'll automatically rate it based on, pulling the protection class rating for that property.
One more question.
Yeah.
I've been told before it costs more to insure a log home because they burn more.
Yeah, we'll get into construction type in a second. Yeah, that'll address that. Yeah.
Do you trust the buyer, the new homeowner with a picture of the hydrant that is, next door? I mean, it's really, sometimes it's just either on that property or across the street. If you don't have access to that information, can the buyer, the new owner, provide proof?
Yeah, typically what we do, right, what we do is we actually go physically inspect the properties, more of an exterior inspection, unless there's problems we want to see inside with the age of the home, with electrical systems and plumbing. But we will see those type of things when we go out and inspect. If there seems to be discrepancy between what our system is pulling and what is reality. We don't have to do that very often, though. It doesn't come up very often. But
How much difference are you talking? All else equal, same exact property, but you have one that's a PC one or one that's a PC 10. How much difference are we talking?
I mean, I don't have any hard facts, but my guesstimate would probably be 30% difference in premium. So we're not talking from a $600 to $1,200, but it could be $600 to $900 or $1,000 pretty easily. What would you think, Molly, with the quoting you've done?
Yeah, with the quoting I've done, I would say that's a pretty good guesstimate.
Right. Yeah.
And it just depends on too. One area that we have trouble covering, for example, is Brush Mountain. And our rates come back really high for Brush Mountain just because there's so.
It's unprotected, yeah.
It's completely unprotected out there.
Yeah. All right, so construction type. So there can be a long discussion on this, but basically brick or masonry construction is the best ratings. Even if the home is stick built and then it has a brick veneer, thank you. Those are still rated better. We rate those as brick properties whenever we do insurance premiums on them. Most popular is wood with vinyl siding or some type of wood product, or hardy plank is actually a pretty good one as well because it's got a really good fire resistant rating. Log homes are pretty high because normally they're inside it's log as well, so you don't have that fire protective sheetrock that helps with some of the slowing a fire down. But yeah, log homes do get rated higher. Plus, they typically have fireplaces, and those are a big source of claims. So once that goes, the whole house is going to go pretty quick. So the claim. Right. Yeah, there is a difference with wood burning, and we'll talk about wood stoves in a second. Yeah, that's a big difference too. And if you deal with commercial buildings, there's like 6 different varieties of commercial construction. That's more of a discussion we can have one-on-one if any of you sell commercial buildings, because there's a big difference between different types of construction on commercial. So the other impact, if you have a brand new home, it gets preferred rates. It could be as much as a 10 to 15% discount on premiums for brand new homes, just because the insurance companies know they were just inspected very closely by the local municipalities. Also, the material is normally better fire rating, things like that. So as you get to homes that are greater than 30 years old, there's more underwriting required, and underwriting is basically just more scrutiny on the policy because they're looking at things like what the age of the roof is, which we'll talk a little bit about, and the heating system and the plumbing in the house. So as you get older homes, there's a little more due diligence required from underwriting and to get the accurate premium for it. So, and it's very common to have homes that are older than 30 years old. But the other thing, if you have a home that was built in the 60s or 50s, but it's been recently renovated like in the last 5 years, make sure your agent, the insurance agent, knows that, because it can change the effective age of the home. And then you get kicked into a better bucket of premiums because they're going to be rating it as a newer home versus something built in the 50s. A lot of times they will ask, well, who did the renovation? Was it a reputable builder or somebody like that, just to make sure it wasn't a handyman project that somebody did on their own.
So if it was a handyman project, you just get it inspected?
Yeah, I mean, then the insurance agent would kind of come out and inspect it, look at it, and use their opinion, if it was done to code. And then they would probably look at the inspection reports, make sure everything was inspected properly through the city or the town. Yeah. And with historic homes, same thing goes. There's some tricky things with historic homes from underwriting. It does require extra time as well. The older the home, the more careful an insurance company is going to look at it, because they're at a higher loss of burning and problems happening. Water leaks is a huge area for insurance companies because it just costs so much money to repair a water leak. So the roof age, I've got some pictures here of roofs. I think everybody can tell the roof on the right is shot, right? It needs to be replaced. Some of them are trickier though. If you look at here on this roof, this is pretty pronounced with the shingles buckling a little bit. That's a telltale sign of a bad roof. Sometimes you will see missing tabs. That's a tell sign of a bad roof. You may say, well, it's just 1 or 2 missing. Well, the reason it's missing is because that has become brittle, and it's starting to pop off with high winds. And good shingle should not pop off if high winds flip it up. It'll just lay back down. So roofs are a major problem. If it's older than 20 years old, it becomes an underwriting issue where they're going to want to know, when are you going to replace it? Sometimes they'll write the premium, but with the condition that you're going to replace it within 6 months and things like that. So the older the roof, the more likely it is going to cause leaks, which leaks cost a lot of money for the insurance companies. Any questions on roofs? Any personal experience? No? Okay.
So if I put a new roof on, I should contact my insurance agent to
I'd recommend.
adjust my.
Yeah, some companies may not adjust your premium, but some may give you a discount for a new roof because they know it's going to be a less risk of having a water claim. Yeah.
And if you replace your roof and you put a tin roof on, is that preferred?
Tin roofs are preferred. Yeah.
That's really big in this area.
Mm-hmm.
So would that change the premium?
Yeah, we do. When we're doing reconstruction estimates, we can put in, what type of roof. Yeah. Mm-hmm. Yeah.
In what stage of roofs replacement, if something leaks, you will cover? And do you ever cover the whole roof replacement? I mean, when do you come as an insurance office saying, enough is enough, you need to do this, and here is the money?
Well, if it's leaks, occasional leaks, when you're having multiple ones, they can cancel you because you haven't resolved the root of the problem. And we had a customer that was about a $20,000 claim. He never did fix the problem, and he had 2 other claims as a result of the bad roof. So they canceled him because he didn't resolve the root of the problem. So you can get canceled. But if you have leaks here and there, they're only going to pay to repair the damage of the leak, unless the leak is a response from a hailstorm or a major storm that blew pieces off. But if it's a slow leak, they'll repair the damage, but they won't actually repair the roof because it wasn't caused by peril.
A question about that.
Yeah.
Suppose there's a couple of leaks and you decide your roof is old, needs replacing, so you cut back to get it replaced. Well, does this vary from company to company, or if there's $1,900 worth of insurance claim, will they throw that into your new cost?
Typically they will. Yeah. Now there has been a lot of, some companies will actually, on a storm that maybe damages 10% of the roof, they'll replace the whole roof. But I've seen that the insurance world is trying to get away from that because you get roof chasers or contractors that are running around saying, oh, you got a bad roof, you need a brand new roof. And so there's a lot of unethical things going on with that. So, and the insurance industry is trying to curtail that. So. The age of your home systems is another factor. So if you have home systems like it's mostly your heating system. The cooling system is never really scrutinized, but the heating system, if it's an older system greater than 15 years old, they're going to want to know if it's been replaced recently, because if it malfunctions in the middle of winter, you could have pipes freezing and busting, and then you have water leaks, which could cause major damage. So hot water heater, it doesn't really come up, but just as a general practice, anything over than 10 years old, you should look at replacing, because my mother-in-law just had a hot water heater in her ceiling. I don't know why builders would ever put one in the ceiling. It's the dumbest thing in the world, but it leaked down and it caused about $8,000 of damage to her hardwood floors and everything. So it was covered by insurance. The hot water heater was not covered because that was just an age thing, but the damage caused by the leak was covered. So she had to move out of her home for a month. It was just a mess. So just proactively kind of change those things out if possible. Electrical materials, especially for older homes, comes into the picture a lot. I've got some pictures here of knob and tube wiring, aluminum wiring, and then fusing. So just to kind of show you guys so you know what it looks like if you've seen it in a home. You don't see this a lot, but if you're in an old home, you may see it. Yeah.
And those knobs, by the way, are too expensive. So if you have a historic home and it is being redone, keep those and sell them.
Tell me where you're selling so I don't insure that home. I know, yeah. They're hard to find. Mm.
People who are remodeling or redoing their older home want that look. Even though they, I mean, for some
I mean, some
people,
people leave it in the home, but they don't use it. Everything's wired modernly, but they'll leave it just for that old look. As long as it's not energized, it's fine if you leave it in there. But yeah, so that's what knob and tube wiring looks like. You may find a company out there to insure that, but you're going to pay through the nose if you do have it.
The house I had that burned had knob and tube wire, and there was an issue with that because I wanted to put some more insulation in the ceiling, but according to Illinois law or whatever, they weren't going to put any more insulation over the knob and tube. They may be, in fact, I had it planned for this year. The house burned first, but you have to rewire the house.
Right, rewire the whole house. Yeah. Yeah. Yeah, it's very dangerous. And that was used in the 1880s to 1930s. So it's a very old. So if you have houses that were built in that era, you're going to see potentially some knob and tube wiring. Aluminum wiring by itself, connected with other aluminum wires, doesn't create a big hazard, but it's when you connect aluminum and copper and corrosion ensues, and then that corrosion causes resistance and heat problems. So one example of that is a couple pictures here of aluminum wiring that's got a little too hot, and so it's a major source of fires. And aluminum wiring was used in the 60s to mid 70s, roughly. So if you've got houses in that range, you can, as a real estate agent, you're probably not going to be looking deep, but you kind of know that these things are there. And if you look at the panel boxes or the electrical panel boxes, sometimes you can see the aluminum wiring versus the copper because they're silver color versus copper colored. So aluminum wiring is a major issue with getting insurance premiums reasonable as well because of the fire danger. Breaker boxes and fuse boxes. So the fuse is on the right, of course. These were used, let's see, do I have the dates up here? I don't recall when they stopped using, but probably in the 50s or 60s is when they went to the breaker box style. So if you have houses that are the fuse style, it's going to be very difficult to get an insurance policy put on it. You'll get one, but it's going to be very expensive and very limited in its coverage. So, any question on the electrical systems here? No? Okay. Next thing is plumbing materials. Because insurance companies are scared to death of leaks, this is a big problem, especially the second one here, polybutylene pipes. They were used from 78 to 1995. So again, if homes are built in that era, they're very likely to have it. I had a case, well, not me personally, but I have a friend that his client had a claim and it was because of polybutylene pipes. And after the repair was done, they actually dropped the insured because they didn't replace all the polybutylene pipes. They're that prone to leaking that insurance companies, if they know it's there, they will not insure it.
But you haven't had any claims here.
No. Not that I know of. I'm not sure if, as an agency for the last 40 years, if we've had. I'd be surprised if we haven't had a single one, but I'm not aware of it being a problem here. Yeah.
But we can, we might not be able to write you a theory, but we can find you a company.
Yeah, there's companies that'll write it.
We have gotten calls, I've gotten calls at the office asking if we cover, these pipes. So, we can find another company that can write.
It's just a higher premium because they know it's a higher risk. Yeah. Yeah.
Are you
And
looking at complete removal of polyurethane and putting new, or can they have changed the jobs where the problem is?
that's a good question. I'm not sure the correct answer to it. I mean, I believe it's replacing it all, but the joints are the big problem. You're correct. That's where most of the problems come from. I don't know if you could leave in the pipe.
There were two phases to that. I had a long talk with the home inspector because I had a house like this last year. The first generation polybutylene used plastic fittings, and most of the problems occurred in the fittings, and people said, oops, and the manufacturers started using metal fittings. for the joints
Yeah,
with a metal trim.
kind of like what's shown there.
Less problems, but still, polybutyl problem is that chlorine in the water will eventually make the pipe brittle from the inside out, and you can't see it.
Oh, okay.
And then it gets leaked.
So even a visual inspection, you're not going to be able to tell.
Those occur at a whole lot lower rate than the problems with the joints.
Right, the joints. Yeah. Yeah. It's a good question. I don't know. Maybe we can find that out and get back to you. Could you jot that down? I was just curious. And then galvanized steel piping is also a problem. Not only a problem for leaking, but just, the health effects of it are not very fun either. So again, there's the insurance premium piece of this, but it's also the cost of the ownership for the homeowner. If they buy a home like this, it's potentially going to cost them a lot of pain and problems, with issues down the road of getting repairs and leaks and stuff. So wood stoves, this includes pellet stoves. These always need to be inspected if a homeowner has one. And the biggest thing we're looking for is clearances. If you can see here, what you're looking for is that on the floor, there's a protective floor covering that is non-combustible. And there's certain dimensions of this. It needs to be so many inches thick and things like that of a non-combustible. But you're looking for 18-inch clearance from the front of the stove and the side of the stoves. Mostly the biggest concern is the front, because as you're unloading ashes and things like that, the potential of embers causing a fire. And then your clearance to a combustible wall, which means, sheetrock or wood type product, needs to be greater than 36 inches. And so these cause more problems than anything for writing insurance premiums, because you'll get 1 out of 3 are installed properly, right? So if this is not a protected wall and it's too close, you can actually go in and add protective material and shorten that distance from 36 inches down to, I think, 18 inches, maybe 12, I can't remember. But there's very strict guidelines on that because of the fire hazard of these. The other thing is homemade stoves are a big problem. You'll see a lot of people, well, not a lot, but you will see homemade stoves out there. And you can tell when it's a homemade stove versus a manufacturer that's an UL approved. Have you seen one or never? Okay. Yeah, when you see a homemade stove, you'll know it's a homemade one. Yeah. But we like to see UL approved stoves that are made by a reputable manufacturer. And if you buy anything from, what's the place in Cambria? The Hearthwood or Hearth? Yeah, they're a very reputable dealer. I've actually called them and had them come out and do an inspection for me on a stove that I wasn't really comfortable with, and it was like $125. So anyway, sometimes I'll do that. Most times we just inspect them, and if they meet the clearance requirements and they're not homemade, they're good to go. But if it's a wood burning fireplace that does not have a stove inserted, it's normally not a problem, right? Have you ran into any issues with that, Molly? Yeah. The big question is it a wood burning stove, like a wood stove or a pellet stove? And then you get into these requirements, and if they weren't installed by a professional, then you'll have problems. So what time do we have? I just want to make sure I'm not.
41.
Okay, okay, so really quick, so Mark can get to his health insurance part. So I talked about adding value to your clients, and one of the ways that we add value at Carper Insurance is that, one, we represent top rated companies. So they give, they're admitted carriers, they're A++ rating as far as health rating, or not health, but financial standings. We also have sub-rated carriers that if you have these properties that have some issues, we can try to find insurance for those as well, to be at a higher cost, of course. We do inspect every property. We feel like it's a service not only to our insurance companies that we represent, but also to the clients, to make sure there's not a dangerous situation. We have insurance coverage reviews with our clients about, we can do it yearly, but typically it's every 2 to 3 years for personal lines, because as your life changes, so do your insurance needs. You may need less insurance, you may need more, depending on where you are in life. Personal property inventory, as a value-added service, we actually do that in our office. If somebody calls us, says, hey, can you come out and take pictures of our personal property? We'll do that. We store them in the cloud, in our cloud system, in our customer management system, so that it's permanently installed there, and we can actually send them a link to those pictures as well for them. So I think we've got pictures of your house like that you sent to me, but I didn't.
I'll tell you, in the past, I have had homeowners call me and say, Amy, you sold our house last year and wow, we've moved someplace else. Your full pictures has all of our furniture. Can you send me those?
Yeah.
The one we moved to ours, yeah.
Right. Yeah, it's sad, and most people don't do it, and it's a really simple thing. So I feel like, if I offer that service and people take me up, it could protect them and, make life a lot easier if that ever happens. So it's something we do. And we really strive to provide the right size protection for each client. So one client is not the same as another. Normally with insurance, you want to look at what that person's assets are. If they have a lot of assets and they're wealthy, they should have better insurance protection and an umbrella policy. There's certain things you need to do to protect them if they were to get sued or being in a bad accident. So any questions on that? I'm going to hand it over to Mark so we don't run totally out of time.
Does umbrella insurance cover even like fire and all that?
Yeah, so here's the standard perils of an HO3. So theft, fire and lightning, freezing, and all these are covered. And then
And the umbrella?
an umbrella?
Yeah, is that additional?
No, so an umbrella is more for,
Insurance plus umbrella insurance, but I didn't think that if something happens and some of our belongings are not covered, then umbrella insurance could do.
so your personal property is protected with the insurance, with the homeowner's policy or your auto insurance. An umbrella protects you against liability charges. So let's say you hit somebody in your car and they die. Your insurance policy will normally have $500,000 or less of coverage, and then the liability policy, their umbrella policy, would kick in for additional. So it doesn't cover property. Umbrellas don't cover property. It's more liability. Yeah, good question.
Somebody falls on your property.
Right, that's another example, yeah. And you were negligent. Negligence has to be proven that you were negligent, slippery floor or handrail that wasn't there that should have been. Those are things that a liability coverage would kick in to pay.
Swimming pool?
Oh, yeah. 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 More of the diving boards and the slides and stuff like that are very big issues. Swimming pools are, yeah. So there's certain things about swimming pools that can become a problem, but you can ride them, but you may pay a higher premium because of liability exposure there. Yeah. So I'll give Mark the mic. Should I? Yeah. Yeah. Should I mic him up? Give him this so he can speak in it?
Yeah.
Yeah. Okay.
How's your voice? You
I don't know, this is me right here.
Well, I can just set it right here in front of you. That way it'll record you. So Mark, again, we'll talk a little bit about the health law changes.
I'll need that.
I
don't have a PowerPoint.
Oh, I have liked it to the recording this.
Right.
Yeah.
I'll hook it up just in case, like that, right?
Yep, you're good.
Is that good? All right, keep it in my pocket. I don't have a PowerPoint, so I got some stuff I'll hand out. But thank you for the invite, Scottie.